Good evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for Monday, the first day of March, 2022. All right, tonight, and we're right after 6 p.m. in just a little while, President Biden will be addressing the country with the State of the Union message. It's unusual tonight because we're going to get rebuttal afterwards from, obviously, the Republicans, but then there's a Democratic one as well. That's very strange, so we'll see what goes on. We're getting, as usual, a bounce. That seems to be the pattern. We get a bounce after a big break in the market. The market tries to get an up day, and then we see how the day goes and if the market's going to get beaten up in the stock market. The gold market is holding in the 1940 level. That is a good number. Let's see if it can continue that. The dollar was up sharply today at the expense of a number of currencies as the situation just keeps getting worse and worse. Putin is desperate. Desperate leads to problems for the Ukrainian people. His army doesn't look as though they're doing very well. That will change. I hate to say it. I hope I'm so wrong. But that size army on a little country like Ukraine, it's one thing, and I said this 3 weeks ago, it's one thing to fight a city battle. The other thing is, though, and you've got to remember, you put your artillery outside the city and you level the city. Then you win that battle. Have we seen it in Syria and other countries? We most certainly have. Is he going to use that? He's already a pariah. The people are getting cut off on the ATMs. Apple backed out today. Manufacturers are backing out. You're seeing British Petroleum drop its interest now in Russia. We are seeing Visa, MasterCard. I can go on and on. They are all pulling away from everything they do with it. There's got to be more, but will that stop the destruction in Ukraine? That becomes the issue. When you look at the gold market, President Biden tonight has certainly got a lot of things going against him. Number one, inflation's a runaway. Number two, he's involved in a war. And number three, his policies haven't really done all that much for the American people. While we've got jobs back in the country, unfortunately, inflation is eating away at the salaries those people are making, and he'll talk about that for sure. I'd be shocked if he doesn't. But the gold sees that, and that's what I'm leading you into. The trend is up, the bias is up, the weekly closes after re-challenging for a while. That 18-week average, you took off to the upside. When we get to the daily bar chart, as you can see here, the pattern is still one of higher lows and higher highs. To me, that's bullish. As you can see, the market sitting here, the resistance, cutting into this big up day where we had that monster rally. And we should take a look at that. When the market got as high as 1976.5, and from there we had the market consolidating. That's what I consider this. Most people wouldn't. But you haven't come out of that range. You didn't get back through the low. You've been trading 4 days in there. Market's accepting that range. What is holding the market back? The challenge up here of the upper Bollinger Band down here. So what's been happening is you come up to the black dashed lines, which is an algorithm designed to keep the market trading within it. The market's not getting, and I know that you're going to knock me for what I'm saying, but it's not getting whatever information it needs to just get over and stay over it and run wild. That part hasn't happened with the market. In terms of the slow stochastics, the market, if you'll take a look right here, loses its embedded reading on this day. When you lose an embedded reading, the market normally makes a run at the 18-day average of closes. This market has not done that. You get caught if you make a high over the higher high, and that could add fuel to the fire because those that, for whatever other chart patterns they're using, sometimes get caught. But let's define what we have. We have a market where momentum is going sideways. It is overbought. We have an uptrend, we have the bias up, and the market keeps hitting the upper Bollinger Band, and as bull markets do, it backs away from it, and then it keeps pushing on it. Traditional way that the market's going. I had said maybe we can get up to the $2,000 an ounce area. Got my fingers crossed. I'd still like to see that. In the ratio of gold to silver, as long as you stay underneath the red line, which is the 18-day average of closes, it keeps the bias to the downside. The bias to the downside, you're looking for the numbers to fall. Think of this as each ounce of silver. So right now you've got 77.98 ounces you need In a perfect world, to go to your coin shop or whatever your depository is, and you're going to give them without a commission 77.9 ounces of silver for 1 ounce of gold. Does that make sense to you? And as long as you stay down, that means the pressure keeps going that way for lower. Silver market, like gold, certainly in an uptrend, overbought up to the upper Bollinger Band. And one of the things I teach my traders to never buy over an upper Bollinger Band. I teach them in my charting course to wait for the pullbacks in the market. Now, if you take a look, the last rally high in this market was right here. And that high was 25.70 and a half. The high just made was 25.65. Still haven't taken that out. When you do, it just shows again that you lost that embedded reading and you never made it to the 18-day average of closes. The copper market is a battleground market right here at the 18-day average of closes. I am not looking for it to go up or down very much in the current environment. The current environment, I still think, is very friendly down the road. If we didn't have the Ukraine to talk about all the good things that would happen as COVID is ending, at least in Europe and America. We know that Asian markets have a nightmare on their hand. Hong Kong especially, they are so hard hit, but they celebrated the lunar holiday. You celebrate that holiday, you travel around, and what happens? You spread the virus, and that's what's happened to them. But we're not seeing that in other spots. The negative for the copper is that the supply chains worldwide are being impacted again. A mixture of COVID, but the Ukrainian war certainly has everybody's attention, and the question is, how bad do things get from that? By the way, Japan, we saw that, I think it was Toyota yesterday had a stop, I think it was at 14 plants, 28 different lines where cars were built. They had a hack. So far, I've not heard that it's Russia. We'll see what happens with it. There'll be more news to come. In the platinum market, we have sunk back to the 18-day average of closes, and I'm not looking for much downside. What's one of the minerals, or metals is the right word, one of the metals that Russia puts out? Platinum, palladium. Big important parts to them, and you can see how the palladium is just staying up. Now, palladium has in a row 1, 2, 3 days in a row where the market, if it closed today like this, over the upper Bollinger Band. You rarely get beyond 5. I think traders are waiting to buy this market on the break. And like the other markets, here's the big rally high of 27.21 made on February 24th when the gold rallied, the silver and all them. Have we taken that out? Nope, 27.18 high. Just fun to look at those things. Dollar index back over the upper band, but notice what it's doing. It's a day under, it's a day over, and the trend is up. It keeps coming up. Here's a dilemma all the futures markets are going to have. Eventually, there's a correction from whatever. It could be a truce in Ukraine. I pray. It could be another event where the capitulation happens and the event just ends and the Ukraine, as we know it, is gone. It could be something else. But when it comes, you're going to get one heck of a break. The exchanges are raising margins. Every day I'm getting a new set of margins, and they are just ratcheting up. There is a reason I moved over to the macro mini S&Ps. That's what's tradable. All the volume, if you look at the big volume, it's there. It's not on the E-mini as we used to know it. It's actually moving to these. You're going to get this in other markets too. As margins go up, traders want the action. They want the ability to enter. They're willing to trade smaller contracts, and away you'll go. So that is something that you're going to be getting. But what you also get from me is the opportunity to look at my research, and my research is good. It's that simple. I don't write pages. I write headlines, bullet points, quick sentences to give my traders what is going on. That's what they want. They can go read the Bloomberg, Reuters, all the other newspapers they want, the Wall Street Journal, Market Watch. I read them all. But by the time you try to read all those articles, what I've learned to do is, I'm one of these guys, by the way, I did take those Evelyn Wood speed reading courses years ago and all those type of things. I've learned to get to the heart of the matter, understand it, and put it on a piece of paper so that my traders get the headlines, what's happening, What's the interpretation of it? How does it apply to the futures markets? That's what I think I have a talent to do, and that's what I do for my traders. So I have different levels of research. Some people want the writing with videos. Some people want a video. Some people want everything. My subscriber videos for both ETFs, spiders, and futures, and the written. Why don't you give it a try? I'll give it to you free. You can get a 2-week trial. All you need to do is go to our website, sign up for it. It's that simple. You'll start it right away, and I promise you it ends in 2 weeks. But you take a look at it, and you decide for yourself, gee, does this make sense? Let's assume you don't like it. You'll have some other ideas and see a lot of chart action over the next 2 weeks. I'm Ira Epstein. Enjoy your evening.